So you're basically wiping out almost all of the estate tax liability that they would otherwise pay.
It's kind of tried to hammer home some of what are the value of an IDGT. And so Peter, want to talk through a case study with just numbers and
Yeah, this is a case study. So the basic idea is that over a long period of time, you save a ton of money with an IDGT, and with a lot of trust structures actually, but with an IDGT in particular. And so this is showing someone named Jay, 41, unmarried, has $15 million. So this assumes he's generating 9% returns each year for the next 50 years. And it assumes that he makes a $7 million gift and then maybe loans $5 million from his personal assets to the trust. And so as you can see, over 50 years, you're basically saving your children, you're basically doubling the amount of money they get. So you're basically wiping out almost all of the estate tax liability that they would otherwise pay in this example. And it's not like a weird example that we crafted in order to generate really high returns. There's a lot of different examples that would be pretty similar. But the basic idea is that $7 million to a trust and you pay the trust taxes, it's just going to generate, you're just going to shift it like a huge fraction of your wealth, probably the vast majority, out of your taxable estate, the part of your estate that's subject to estate tax, and into the trust, which is outside of your taxable estate. So it's not going to be subject to estate tax. And so because in the sort of green and black bars, your kids are basically paying little, if any, estate tax, they're just coming out way ahead versus the no gift scenario where your kids are essentially paying a 50% estate tax. This assumes a New York resident. And so his estate tax rate is around 50%.
yeah. And again, this is just really one is the power, not doing any estate tax planning, you're passing on the least amount. It's obviously still a lot of money because of compounding and growth and time here. But with an digital loan, you're dramatically increasing this. And then the loan further optimizes this. And by the way, this is, if you notice in the scenario, this digit plus loan is obviously better than the digital loan. The individual had more assets and could do a higher loan amount or more leverage. The numbers would be dramatically higher. And so one of the things to call out is in a world where currently you can gift 14 million, a little under 14 with the current numbers during your lifetime individually. But as this gift exemption drops at the end of 2025, using leverage in this loans will be even more powerful for individuals who have a lot of value, because as a couple, they could give 28 million today. That's going to drop to 14. And so the power of leverage and loans to move those outside of your state will become even more critical and important to understand and utilize.